But the big question is, how do I make sure I don't get audited? How do I make sure I'm doing things correctly? What should I avoid? What's going to cause me to immediately get audited? What would you recommend folks do to make sure that they have the smoothest filing experiences out there?
What I tell people is this comes down to common sense sometimes. Is not in again the Lamborghini example earlier. Not buying a $100,000 Lamborghini and just writing it off within the business, and then having no business really to write it off with. So,
Yeah.
it seems like common sense. Some people will follow bad advice or just think that they can outsmart the IRS at that point. There are things that we can do that are legal and within the IRS regulations that could work in your favor, but ultimately, me personally, it just comes down to things that you kind of look at them and you're like, wait a second, this makes absolutely no sense. But and I always ask them, it's never when you work with the tax preparer's job is to ask the questions, get the information, do what they need to do. However, if the person doesn't give that tax preparer all of the information, it still falls upon the individual that the IRS will come after the individual. They don't come after the tax preparer at that point. So what I try to do and work with my clients is I try to ask those questions and make sure that they have an understanding of what's going on and there's nothing that's going to be set off as a red flag. So, we don't want to, pretend that we have 25 kids as a deduction. We don't want to pretend that we have, 7 family members that we're taking care of and we live in this little 1,000-foot apartment. And, we try to use that common sense to not set any red flags off of the IRS. Again, there are a lot of different things that people can write off as part of business expenses that are used on a daily basis or yearly basis for their business. We just don't want to be able to say that we have 100 of those expenses every single month that you're not taking advantage of because you're trying to pay it for a family member or trying to do something else that is going to be there. And the IRS has every company usually fills out a data census every year for expenses within their business. So the IRS and the government has all this information that they know this is a typical business expense for this type of industry. So if you're in one industry and then all of a sudden you have 5 cars, but you're not repairing cars or in the car industry, the IRS looks at it and goes, "Wait a second, this quite doesn't add up. Let's do some more investigation." So we just try to make sure that the common sense is there and people are doing what they need to do in their industry and not causing issues that the IRS is looking at you at the top of the line. If you kind of go through their computer systems and the return gets processed and you never hear from them, then that's great. We just don't want to be the ones that they're coming back and saying, "Hey, you need to justify these 5 cars in your business, and you work from home, you never visit clients. Why do you need 5 cars at that point? Because there's no way that you're going to be able to substantiate that expense, and it's definitely not something that is really needed for your business."